All right, y'all. Loki doing this a little bit earlier than normal, but we're gonna review the price action that we had today. As you can see, this is what it looks on the 5 minute real quick. I'm about to break down in my interpretation of what price did, and yeah. By always, I have a free Discord if you guys want to join it. It's in the description, completely free. But if we just look at where we're at coming into today, I'm gonna mainly just show up NQ right now, and then we can kind of go into the other indices just a little bit more. But if we're just looking at where NQ's at right now and where we have been, so in just context of like where we came from and where we're likely to head. So if we come here, we had this SMT with ES, or no, it was this SMT here with ES. We have this SMT here with ES, and then we're bouncing off and rejecting off of this order block, this fair value gap. So that's why price is really heading higher here. So we're bouncing off of these here, and then this is why the daily is in the trend that we're in. We're respecting bullish order flow at this moment currently. And if we just look at the 4 hour, if we look at the 4 hour, we have liquidated this original consolidation. We're now kind of digging our way up into this 4 hour imbalance. Also this 4 hour order block that we have here. And if we zoom out, I believe there's a daily volume imbalance. Yeah, and then this volume imbalance, which was the draw on liquidity today. So this is hindsight. The draw on liquidity was this volume imbalance, but why did we get there? What could we have seen something? Could we have seen price that would come? Sorry, I'm trying to drag this out. Could we have better prepared ourselves for today? And this is what I think the draw on liquidity is. And in terms of bias for upcoming days, all right, I'm not going to mess with that volume balance. But basically, we came within this volume imbalance, and let's zoom in and let's find out what possible trades that we could have engaged in and what we could have seen. So my bias coming into the morning, I was kind of bearish bias, but I also knew that we were in bullish order flow. So unless if we had some form of smart money reversal low of the day, we now have manipulated Asia low, and we have expanded higher. So New York opens up here, so I'm expecting New York continuation because this manipulation move happened in Asia. As you see here, you have accumulation, then you have manipulation, then you have your distribution leg. So that's exactly what happened. We had manipulation in early London. So I don't really think that there's a need for us to come all the way back down to Asia or London low because we've had this manipulation move. And if we look at where we're at, this is just bullish order flow. Bullish order flow. So in order for order flow to reverse, what has to happen? We have to hit a higher time frame PD array and preferably an SMT. Not all the time do we need to have an SMT, or at least me, when I'm talking about we, I'm pretty much saying myself, because this is how I trade. It's how I look to trade. This is how I look to get better at trading, is whenever within, if we're looking at, is order flow going to reverse? Higher time repeat rate, and then preferably an SMT. Not all the time does there have to be an SMT, but preferably you want to see an SMT to really classify that as a true strength reversal. So we come in here, come in today, and kind of like my bias and what I see, we have this fair value gap. We also have this order block. So I'm thinking that, hey, we can reverse here. We have, because we're within a higher time repeat rate, and we also have SMT. The SMT that we have right now, or at least that we were able to have, was one with YM. Kind of pull up where YM is right now as well. Let's zoom out. It's all 1 minute. So we do have this SMT with YM, I believe. NQ, the highs all the way up here. YM has liquidated that high, has taken that high. So therefore, this could qualify a possible reversal, and we'll touch on that within the daily bias coming into the next days. But I'm expecting us to possibly reverse here. But honestly, how this candle's looking, I'm not sure. So if we zoom in, kind of see what type of price action we had today, kind of like where we opened up. So we had manipulation in Asia. So we know that order flow is bullish. In order for us to switch order flow, we have to hit a higher time repeat rate, and we have to have SMT. This whole day we were within a daily fair value gap bearish, so we could have possibly reversed here. But what do we need for a reversal? Probably change state delivery. We need to see some form of model to validate that. And if we look out throughout the day, there wasn't really much of that. We know we don't have true displacement to the downside. I mean, the only time we really kind of displace is here. But where are we displacing to? A 15-minute fair value gap that we end up pushing higher off of. So right now, market's opening at 9:30, and this is when we get, I believe, an SMT with ES. ES fails to take this low. Where is it? It's right here. It's right here. Yeah, ES fails to take this low, and this was just classic trend day. SMT here, and then we get push up, bought up higher. For me to take a trade here, I'm not really gonna look to take a trade. Like, I'm just gonna read the tape. We have a Monday with no red folder news. As you can see, we kind of consolidated within this range. Like, yes, we are expanding higher, but I would classify this more as accumulation. But it is with some expansion higher. You know, accumulation doesn't always have to be in a sideways fashion. Like, we can be accumulating higher to then have manipulation. But I would say this is more kind of expansion. But it's not like we're expanding like this. We are here, you know. So I'm looking at this, and I'm just trying to gauge what price wants to do. We come up, we have a run higher, and then this high, we put in a high here, and that's important. We put in a high, and then we've also put in a 15-minute fair value gap. So I'm looking, order flow is bullish, so I'm bullish right now. We put in a 15-minute fair value gap. What could we possibly reverse to? That 15-minute fair value gap. We end up coming back down, and I think that this was the only like good trade that I saw today. We end up coming back down in that 15-minute imbalance. We end up coming into this imbalance here, and we actually had an SMT between these lows. But the reason why me personally, I'm not looking to long this is because we have an SMT here, and I just think it's a little bit too early. Like, we need to have structure validate something. And I am going to put in here, sorry, I'm kind of all over the place. But I was kind of bearish here because we were within this higher time PD rate, and we did have SMT with YM. So if we look at this is kind of like your 3 drives pattern. This is at least what I saw while I was reading this live. But we didn't have to be bearish because we're still within bullish order flow on the higher time frame, such as the 15-minute. I don't know if I'm making that more complicated than it is. But we see on the 15-minute, there is no true change state delivery. There's no true. The only bearish for value gap we put in is here, but we're still respecting these bullish we're still respecting these down close candles here. So we're still bullish on the higher time frame. So that's what I need to validate. And I think I'm lagging right now. Dang, it's unfortunate. But I guess that this first move lower, the reason why I'm not validating this to be a long setup is because we don't get displacement out of it. Displacement just means a fair value gap. And you see now here that we have displacement out of this range. Now we've had some form of fair value gap indicating that we want to go higher. And then we also have this stop hunt here. So that kind of signifies that we do want to head lower. And then you end up pushing higher. A fair value gap, you could have taken that. You could have looked to take this fair value gap. Also have this breaker here. This would be the only thing that I really would have liked. But even then, I probably wouldn't have loved it because we are in a higher time frame bearish PD array. Taking here. And then you could have targeted these highs. Put your stop at the low here. That would have been like a good two risk reward trade. That's the only thing that I really see. And also, I do like this. We're about to talk about this in a second. But you see how this price leg right here is officially delivered. We have both sell side and buy side within this range right here. This now becomes your balanced price range. And you see how here we come and we expand outside of this. So this now becomes your unfair. We have no sell side offered here. So what are the market makers going to do? They're going to reprice lower into this area of fair value, into this area of fair value, and then continue to head higher. That's something that I could have possibly seen take, and that's the only thing that I would have other liked. But this was a market maker buy model. You had sell side of the curve back into that 15-minute fair value gap, and then you had your buy side of the curve heading out of that fair value gap. And the reason why this doesn't end up complete, or the reason why we don't get bought up here, even though we had SMTs, because we don't get any fair value gap. Like, there's no displacement out of here. And now we finally get displacement, so this model is valid. And then if we're looking at this from terms of, like I was just saying, fair value, what do we have here? We have a completely balanced price range. We have both sell side and buy side offered within here. And now what we're looking at is, are we possibly going to expand higher, or what does price want to do? So now we sweep this high here, and then we displace lower. the fact that we had this displacement here validates that, hey, we're not trying to seek we're not offering fair value here. We're hunting liquidity. And to really truly understand this, I would recommend watching a video by Arjo. Shout out to Arjo. He's you can look him up, ARJO. I also post a video in my Discord. But this, the fact that we're displacing lower now, we know that we don't want to offer fair value here. So the draw on liquidity is now becomes this low here, and now we are within a sell program here. A sell program here. So, and the reason why we're possibly heading lower is because if we zoom out, it's the same concept. And this is a concept I really want to get better at. We zoom out to the 15-minute time frame. You see right here, this now becomes your balanced price range on the 15-minute. And now, within this range, only buy side has been offered here. Sell side hasn't been offered. So what is price going to do? Price is going to come back down, and the market makers are going to offer fair value, or they're going to offer sell side here, and then we're going to end up coming back down and then heading higher. And if you zoom out, if you have that higher time frame perspective with the lower time frame, things start to get a lot clearer. I didn't trade today personally, but this is just what I see. And as well as that, we have taken both buy side and we have now taken both sell side of this range. We're still holding this 15-minute fair value gap. We're now coming back down to this 15-minute order block, but more importantly, what even is an order block? An order block is an area of fair value. You see this leg here? We have offered both sell side and buy side. Price is going to price is going to offer this fair value back in this range, and if we want to go higher, we will respect this area, and that's what we end up doing. We end up getting that bought up, and I'm going to kind of zoom in on the 1 minute. We end up having an SMT with YM here. We end up leaving buy side liquidity up here. This could have been a good long here, and that's the only thing that I really see. That's the only thing that I really see is a long here, or you could have got in early here off this fair value gap. That might have been the only other play I see here. But other than that, that's what I saw. We zoom out. Let's zoom out. Just pretty much bullish order flow, bullish order flow, bullish order flow. Why fade bullish order flow like we're seeing right now? Why fade bullish order flow until it tells us that we want to be bearish? Look at this. We had SMT with YM and we get bought up right here, respecting order blocks. And I don't know if there was really another entry. I wasn't really looking, but kind of just slow move up here, slow move up here, slow move up here. In order for price to reverse here, like displacement and what I'm looking for to look for a possible short here, which we are within a daily fair value gap, it would be displacement lower, and an SMT and a higher time repeater array. But we are in that daily fair value gap, so that's all I'm looking for. And even here, you see how we're just accumulating. Or yeah, here's a good example. You see how we're accumulating? We know that price isn't going to reverse. We know that order flow is not. Well, when I say price, I mean order flow is not going to reverse unless if we have some form of manipulation. Preferably higher time repeated rate and SMT. That's the only thing I'm looking for order flow to reverse. You have accumulation, manipulation, distribution. That could have been a trade you could have taken, but very scalpy there. And dang, look what price is doing right. Bias here as well, because I'm not gonna lie, I don't like this because I was bearish, but I don't know if I like this. If we go into what I was talking about, this area of fair value, we know if price wants to go lower off of this area of fair value, we're gonna respect it. So this is an area when I could possibly look at mean threshold of this area. This is a balanced price range, and just the way that we're attacking this, I don't necessarily love the fact that we're attacking this. We have this wick here, which, yeah, you can map out this wick. You can map out consequent encroachment of that. I'm more looking at this whole range, and I'm just going to mark out consequent encroachment of this whole range. If this gets violated, we're definitely running on new highs, but I would like to see this get respected. But if I also do want to pull up YM as well, consequent encroachment. I want to pull up YM just to show what my bias is going into the upcoming days. If we look at YM looks pretty bullish here. We come back in and we have now swept this low here. And this now becomes your soup. We're now getting displacement higher into that weekly fair value gap. That's what you wanted to see if you were bullish. Within this now just kind of becomes your fake move lower. But again, I'm going to trade the chart, not my bias. But starting now and just how we just look today, this kind of looks a little bit bullish. I don't like how we're approaching this area with as much speed as we are. Look, we now created a daily fair value gap. Now we're approaching this with speed. So I think that we could reject off this area, but I think it's more probable that we might want to attack new highs. That's what I'm just looking at. That's what I see right now. We are within this order block here, this fair value gap, and obviously this balanced price range that I have mapped out. So price should not disrespect consequent encroachment of this range if we want to head lower. Right now, we have generated liquidity below us. We have generated liquidity above us. So I don't really know what the market wants to do. I want to see more structure on the higher time frame. So with that being said, I think that we could attack lows and we also could attack highs. Because if we're looking at this, I don't really care about any of the SMTs up here. These are kind of old drawings that I have. If we're looking at this, we now have generated liquidity above us and below us. So therefore, I'm going to kind of just leave it up to what the market wants to do. Like, I'm not going to trade a bias. I'm going to let the market really show us what we want to do. You see this low resistance below us and above us. We're now sorry, excuse me. We're now back within, I would assume, equal or OTE of this price leg. Overall, though, the probabilities of us going higher are much greater than us going lower. Because I'm not going to look at what order flow is doing right now, and I'm not going to say, oh, we're going to reject off of here, because order flow is clearly bullish right now. Clearly bullish. And this candle's about to close. Or we got more time on the daily candle, but I'm expecting to see at least a wick on this candle. I wouldn't you would expect to see a wick on a candle. Okay. Let's kind of go into some. I know I was kind of like all over the place, but basically overall for today, what I liked is what I possibly could have seen. Let me delete this. Is a long here. Maybe an add to the position, or maybe just trading that second stage right there. Maybe a short here off this fair value gap, but even then, it's just not the highest probability. Not the highest probability. And then here, a long right here, and then maybe a long right here as well. That's all I see. Other than that, this is just structure. Oh yeah, and then maybe a long here, because we know that once price consolidates, we can't reverse from a consolidation. So price can't go here. If we do something like this, we assume it's a fake move and it's just a manipulation. Even if we do something like this, we know that price will likely not reverse. And then look at this daily candle, how it closed. This just looks bullish. The fact that we did this just tells me that we likely just want to go higher here. We have completed this original consolidate. We have completed this market maker model on the higher time frame. So we're looking at this. We had market maker model here. And then within that market maker model, we created another market maker model, kind of. We had original consolidation. First stage. Or low risk entry there. I don't like looking at market maker models in terms of low risk entry anymore, because if you think about it, they're all just opportunities to get into the market. I don't think having it, like, classifying it as a low risk entry is really beneficial. And that's what I found out for me. Then you have your first stage here. We end up completing this market maker buy model. Yeah. So let's kind of look at I want to look at Bitcoin. I really want to see what Bitcoin's doing, because in Bitcoin, it looks like we're in a market maker buy model. We come back down. We have now taken this. We have now come back down to this weekly imbalance. What is this? What is this? Internal range liquidity in terms of fair value gap to external range liquidity. That's what I'm expecting to see. If we zoom into the daily, right now we have this manipulation leg. -4 kind of lines up with there, but I'm gonna leave the standard deviation out for now. If we look at terms of structure, we're now invalidating bearish imbalances here. Notice how this bearish imbalance got mitigated and we didn't push any lower. We came in this fair value gap and we didn't push any lower. We just came back up. We didn't create new fair value gaps off of that. So now I'm looking at that. We completely close above this fair value gap. That's your first sign that we want to go higher. We then create new fair value gaps higher, and this now looks pretty bullish. In terms of structure right now, we've now just purged this low. This could be a continuation purge. What I mean by that is we could take this low and then we could continue higher. And we could leave this area as breakaway, but if we're looking at this, this now becomes a balanced price range. I don't expect price to really trade far back within here. We could retrace this 4-hour fair value gap, but if we retrace all the way here, I don't expect this market maker buy model to really complete within the next two, like as fast. I'm just kind of overcomplicating it, but if we retrace all the way here, isn't as bullish in my opinion. But right now we have low resistance liquidity. We've come into this weekly imbalance. We now hit internal range liquidity. I could see us going back to external range liquidity, just in my personal opinion. Then let's look at DXY. I want to look at DXY. Looking at DXY, like I was saying, this looks like you have your original consolidation up here. And I'm curious with DXY as well, because DXY being bullish right now, and DXY being a stage when I want it to be bullish as well, and DXY is looking like the overall bias is bullish right now, will add confluence of a bearish bias onto the indices, but I want to see more structure. And what I mean by that is we've kind of put in this low here, and I want this to be confirmed as an intermediate term low. Because right now, this is just an intermediate term low. This becomes an intermediate term low. Why? Because we have a short term low on the left of it and the right of it. So I want to see more short term lows be put into place to now confirm this as a long term low. So that's what I'm really looking for. Now come out. We've left equal highs up here. And I think that the draw is still higher. As we see on the daily, we have this nice original consolidation that I want to see us liquidate. We now come back down. We've used this fair value gap in order block as support. We're now starting to react off of that, but I want to start to see displacement higher to really truly validate something. So within the next 2 days, I want to see us displace higher to validate that we want to go to these highs. So that's what I'm really looking at in DXY. And in terms of anything else, I want to look at gold. I'm just curious. So we know that gold is in all-time highs right now. So bullish order flow. So I'm not looking for shorts that much, unless if the model is there. We've come back down into this weekly fair value gap, and we have mitigated it. So we have come in this weekly fair value gap. We've now put in a. Oh wait, we're now starting to see that we might be putting in a swing low here. This can be a swing low within the market. We zoom in. And right now, we're kind of just keying off of two imbalances here. We have the weekly imbalance here, and then we have a daily imbalance here. Which one holds more power, though? The weekly fair value gap for sure, because it's on the higher time frame. In terms of this structure right here, this doesn't look the cleanest. We kind of have equal highs here, relative equal highs here within that daily fair value gap. We've now put in a swing low here. This will likely be a long-term low. It could be. We're starting to displace higher. So for me right now, the draw on gold are these highs here, but it also could be these highs here that head lower. Nothing looks very clear to me, but we are starting to displace higher. So I'd be more comfortable looking at a draw that would be this high here rather than these lows, because we have swept these lows here. And if we look at this wick, this is a true sweep of liquidity. And now we're starting to displace higher, so this looks pretty bullish in my opinion. Keep in mind, order flow on the monthly chart is still bullish. Look at the weekly fair value gap, probably to external highs, but know that anything can happen. I don't really ever trade gold. So anything else I want to go over? Oh, other than that, we're just at a point right now to when I want to see it start to reject here. DXY is bullish. DXY is bullish, or it could be bullish. I'm more bullish on DXY on the higher time frames, and I'm more bearish on the indices on the higher time frame. So now I want to see intermediate term structure. I want to see hourly structure that supports that idea. If we're looking at this just in the lens of right now, where we're currently at on the 4-hour time frame, we have low resistance liquidity above us, and we have low resistance liquidity below us. We're now getting displacement higher. We have a fair value gap and an order block in which we could reject off of. But right now, in terms of what order flow is currently doing, it just looks bullish. So I'm going to be more bullish than bearish coming into the next days. Other than that, like, I'm not trading. I'm not trading at all for this next month. I'm just here to become better, to become a better trader, and to really try to master, or not master, but become a better trader. That's like all I'm here for. That's all I'm here for. And it might take a while. It might take a while, and I'm here for whatever ride it goes on. I feel like I've just been making zero sense with my words today. I don't know. It's cool. I'll be live tomorrow for sure, 100%, and I'm excited to be back live. Overall, just this market looks kind of bullish. It looks bullish. We're showing bullish order flow, but this could be an area in which we have a smart money reversal. Why? Higher time frame PD array, SMT. We have SMT with YM that I showed out earlier. It's all the way up at these highs here, I believe. Yeah, it is these highs. YM has taken these highs, but I'm not going to mark an SMT until we get displacement lower. Until we get displacement lower, that's when I'll mark an SMT. It's also with YM. If it was with ES, I would have more confidence within it. Yeah, other than that, I don't have anything to look at. Today's action was pretty what you could expect. What you could expect to see on a Monday with no red folder news, but that doesn't mean that there's not going to be opportunity. Like, there still was opportunity in terms of order flow and the way that order flow presented itself. I'm gonna pull up the economic calendar real quick, and then we'll just briefly go over this again. Like I was saying yesterday, Monday with no red folder news, I'm not expecting much. Tuesday, no red folder news, I'm not expecting too much. Wednesday with only orange, I'm expecting 10-year bond auction to actually spark volatility. I'm expecting this to kind of spark, like last time we had 10-year bond auction, I remember it being a significant move. So I will be cautious of that on Wednesday. And then in terms of the rest of the week, we have 30-year bond auction, and then we have consumer sentiment. So Monday, Tuesday, Wednesday, no red folder news. What does that mean? We possibly could have, or more possible than not, Monday, Tuesday, Wednesday, accumulation. Maybe Wednesday we have a reversal, and we could continue lower. But right now, despite order flow, tomorrow's going to tell us a lot. Tomorrow's going to tell me at least what price wants to do within the next upcoming weeks. Because we either get a run back on all-time highs, or we continue this kind of trend and momentum that we have put in place. But just by looking at this, what did we just disrespect? We just are about, we're probably going to close all the way above this fair value gap. That's not a good sign for me if you're looking for bearish. If you're looking bearish, that's not a good sign. So with that being said, I don't have anything else, and I appreciate you guys. And I'll see you guys in the next one. There'll be another review tomorrow. Or hold up. I actually do want to let me pull up Notion real quick, and then I kind of want to, so I've been back to this a little bit, and I know that we said that we would, or I said that I would come on here, and then I would show 5 examples, and that's what we're gonna do right now. Back testing. I got plenty of examples, so I'm not gonna run out anytime soon. Okay, let's see this example. Just by looking at this schematic of what price did. Where are the entries here? Right here is your low risk entry. Right here is probably your first stage of accumulation, and then this becomes your silver bullet. Let's see what that looks like. Right now is your low risk entry. We come up, you have a stop rate. This is that manipulation fair value gap. We then close below that fair value gap, and then we're waiting. This looks like an OTE retracement to then have displacement lower, come into this fair value gap. I'm expecting this fair value gap to hold and this to be that draw on liquidity. We then have displacement lower. We have a stop right here. We have a purge here. Also within this fair value gap. Also within this order block. That could have been another entry. And then we come back lower. Fail to take this high. Confirming this as the intermediate term high. Then once we get displacement lower, you could maybe take an entry here to then target that original consolidation right there. And let's see what the annotations I put on. I don't know if I like these annotations. Might get rid of them. Oh yeah, we also notice how we have that within that old selling point. Let's pull up number 2. Just by looking at this, where are your entries? Looks like you weren't offered too many entries, but this would be your lowest entry, and then this would be your, or if I don't, this would be your first entry, and then your second possible entry point. That would be your silver bullet. So by looking at this, you have a clear original consolidation. We come up into equilibrium of this range. This would be that 50% range of that market maker model. We come back down, have a stop rate. Then we start to get displacement. And where do we reprice back to? In terms of what I was talking about with fair value earlier, in this area, sell side and buy side were both offered. Then we come back down. Where do we come to? That area of fair value. We respect it. We head higher. So therefore, you're looking at this, and the entry doesn't look as clean in my opinion. Like in terms of like standard, where you're gonna enter, I would say maybe this fair value gap. This fair value gap that offers that fair value area. So right here, that fair value gap would be where I would look to enter. I know this is all hindsight, and if you're seeing this, you probably would get a little, or at least I would get like a little bit scared. But this is just a stop hunt into that area of fair value and that fair value gap. We come up, and then this could be possibly your second entry. Standard deviation lines up nicely. At equilibrium, you expect a stop hunt, yeah, and that's your breaker fair value gap. But we know that this is a breaker. But why is it a breaker? Because we're offered both sell side and we're offered both buy side within this range. Then this price leg from here to here is only buy side, so we know that price is going to come back down here to offer sell side. And look at how perfect that is. Can't make that up. So by looking at this, where's your possible entries? This would probably be your first entry, second entry, third entry. Comes your area where you trade. So you have an SMT here. I'm assuming this is definitely a higher time PD array. Come back lower. Order block is respected perfectly. Come back down. Order block. And then we have a fair value gap here. I don't really like this. This model isn't the cleanest, but if you look at this, this is an area of fair value. Both buy sides, sell sides offered. Come back into that order block perfectly. Yeah, that's the one. I don't really like that model though. So this, ooh, notice how we have generated sell side. Come back, first entry, and then your second entry down here. In terms of entries, probably isn't too much offered, but let's see. Higher time frame PD rate, we'll probably likely have an SMT here. Notice how this becomes your breaker. There's not really a fair value gap here. We don't really have too much displacement within this whole move. So I don't love the fact that we don't have displacement. But that breaker comes your first entry. Then we kind of taper off lower. Come up. Stop raid. Then I would look to take this fair value gap would be your silver bullet here. Because this is your intermediate term high now. That's confirmed. Come back, fair value gap. That would be your second entry. Other than that, that's the only thing I see. But I do like how this is a low resistance liquidity signature. I guess LR signature. LR all over that. Okay, this says very nice. Looking at this, lower or your first entry, maybe your second entry somewhere here. Reverse consolidation, come back lower. displace higher. Notice how this is your. I'm not gonna talk. Actually, I'm not gonna say that. Come back. Where we come to fair value gap, displacement higher, equilibrium of this price leg. What do you expect to see? A stop rate. We end up having that stop rate, and then we get immediately bought up. So that would be your silver bullet. How do I annotate this? I think I had. Yeah, notice how well that standard deviation lines up. And then that -2 to 2.5 ends up holding. What do you expect to see? A stop hunt. You could enter here. You might have got chopped around here if you entered here. But where would you take partials at this first high here? Breaker block. Breaker block and that mitigation block here. Or that also is a breaker as well. So you have your overlapping breakers here. That becomes a high complex area. Alright. Yeah, that's all I got. That's all I got. Those are the 5 models that I went over, and I'm sorry if it like I'm only gonna get better. And that's the thing. Like, you can't just start at the top. You can't start at some place where you're not at currently. Like, you gotta work your way up there, and that's what I've been putting in a lot of work in, just trying to deepen my analysis and understanding of these markets. So that's what I've been focusing on. Just that's all I've been doing, pretty much. So with that being said, I'm gonna head out of here. Hopefully y'all have a good rest of your day, and I'll see you guys tomorrow. Tomorrow, 100% live and market maker review. I apologize for last week. I wasn't as active. I didn't have as many market maker reviews, but I'm not gonna be doing. I'm pausing Road to Funded right now, and I'm taking a break. And that's simply what I'm doing. I'm actually gonna film a video right after this on that. But anyways, I appreciate